traders, Chris here from Student Education with the 4 Majors Analysis Update for the 7th of October 2011. Hi guys, just a quick brief update on the 4 Majors this morning. I don't trade non-farm payroll, so I'm staying well away from the markets today. So just a quick brief look at the 4 Majors. As I mentioned, we have non-farm payroll today, so it's going to be a very hectic day. There's a lot of news out for both, well, in particular US non-farm employment change or unemployment rates included. So very busy afternoon, and with that comes a lot of volatility. Yesterday we saw some significant moves to the upside after we had corrections, but those corrections now have taken us to, well, in particular above a very strong support and resistance level at the 13,400. Now that's a psychological support and resistance level, and we saw a breach of that. So now what we have is a break of psychological support and resistance to the upside. Are we going to get a continuation? Notice that the yen or the Asian session, very fat, slight consolidation at the upper end. So ideally we're going to see further progression today. Then obviously you want to see these highs being breached, or yesterday's high in particular being breached, but that's taking you back to the prior support and resistance here on the bodies a number of weeks ago. So very hesitant today. One thing to mention is you can see that we are pretty much in a downside trend. We're having lower highs, and as I mentioned, that dictates price action or trend direction. So you look at what price is doing now and what it's likely to do. You can see a very slight area for movement, and we've had breakouts or significant turns at this level. So if we are in a consolidation channel, are we going to see possibly further negativity today pushing this low? If we do, then great, because then it'll give us a setup for further direction. Ideally a breakout and close lower than yesterday's low below here at 13,500 would definitely indicate that we're going to see lower swings, and ultimately we should be looking at target wise roughly around the 1300 mark, price support and resistance, significant resistance at that, support at that level. So break lower or consolidation here. If we do get a break higher than this this area here and a noticeable bullish up candle, then sure we're going to be looking at previous swings. In this case 13,600, another one at 13,700, and another one here roughly around the 13,900 mark. So bearish engulfing here, or a bearish arami, or a shooting star, something similar to that at this potential ceiling level, could see a return to the downside. We've seen it before on 2 occasions in this channel. There's no reason to say we could see the same outlook again for this pair. We'll notice we are very negative on the pairs, so there should be no difference. We need to see a punch higher than the previous swing in order to give us a definite clear indication that we have broken major trend direction. Next up is sterling against US dollar. Let's have a look at the daily. A lot of action yesterday, a hell of a lot of action on this pair. We saw the Bank of England deciding to pump another £75 billion worth of funding, or QE, quantitative easing measures, if you want to call it that, into the market, and we saw a massive sell-off. Then literally not even an hour later, a total reversal, and what it's done now is it's for the 4th consecutive day now found support at a significant area. It's not a significant area, it's just there is a genuine support area being forged now. We had a lot of wick to the downside. Is that giving us confirmation that it seems to be more sentiment pulling to the upside? Still news both circulating that the banks are willing to, or what the governments are trying to get, or the banks are trying to get more money to be circulating. There is a definite area of support and resistance here, and it's just channeling between those points. Now if you want to trade that news, then be my guest. This is just crazy. 2 particular days here that we saw large amounts of movement, and just holding at that level. We know that psychologically that 15,3500 is a very strong support and resistance. Why? Because if you look back here, if I go back looking at a bigger time frame, you'll notice that we had two clear, very strong support and resistance levels at the 15,3500 mark. And psychologically we had a bounce, and on two occasions now we've had two attempts of this area and we've found support. So psychologically, I don't know if this should be looked at as positive bounce, more action on the top. This is pretty much what we call a hammer candles. This one more of a spinning top than anything, but more price action on the top end of the wick. That's the most important thing. Same over here. More price action on the bottom of the wick and a prior resistance level. It just gave us indication that there was less likelihood of a further momentum to the upside, and sure enough we had a break lower. So here it's the other way around. We're getting a lot of wicks on the downside and more price action on the top, which dictates that we should see higher swings. If that's the case, then we want to see today's candle punching higher than yesterday's, which will take us right above the prior range that we've had for the past week or so. And if that's the case, then we should be looking for ultimately a test of the prior support here at roughly the 15,700 mark, and ultimately back up to the 15,650 mark, which happened to be a prior swing support and a prior resistance in that case. So everything at the moment now is stacking up. It looks like bullish. The Asian markets has seen price continue higher than the close. As long as we have a break and close higher than yesterday's high, which was 15,500, trading higher than that, then obviously you're going to get further extensions higher. Be aware though, it is non-farm payroll today, so we could see the US data really factoring on today's price action. We also have a 9:30 a.m. GMT this morning. We have the PPI input month-on-month figures for sterling. Well, the previous figure was a negative 1.9%. They're expecting a forecast better at 1.3. So they're expecting a better than previous figures for the PPI month-on-month figures. This PPI result is just a leading indicator of consumer inflation. When manufacturers pay more goods, then obviously the cost of those is spread on. So this is the problem we're having now, is that we know that the concept of easing, we know that we're going to have issues with, we haven't raised our interest rates, we left them at 0.5, and obviously if that's the case, then inflation will become an issue going forward. And we're expecting a higher inflation rate at 1.3, and we're seeing that going to be factoring into price action at 9:30. Just be aware, at 9:30 a.m. GMT this morning we have the Producers Price Index PPI result. So could be you can see in our price is really testing that high there. So we want to see 30-minute an hourly close above that area to see further confirmation, further upside movement. US dollar Swiss franc daily, you can see a shooting star pattern at further resistance here. 1, 2, 3, 4 consecutive days of resistance at the daily pivots. This is the daily pivot area here. Make it nice and strong, which happen to be price support and resistance level at roughly the what's this, at 92.34. So 92.34 needs to be breached to see further extensions higher. We do have higher swings going into this, so if we just plot those in, fantastic. Higher swings going into price action as we are heading higher. However, you'll notice that the highs, depending if you're using the wicks, we are starting to see consolidation, slowdown. Well, that's going to happen because we are trading at a very strong support and resistance level, in particular here, the pivot 1 area. This is the daily pivot. Got to be seeing a breach above that to see further extensions. Otherwise, we're going to see consolidation. Yet again, you'll notice that we've had the 915 mark. We had prior intraday support and resistance. So if we look at those time frames, especially in our plot that on, you can see that if I just zoom out, we've had prior support and resistance at that level. So you want to see a breach of that. You can see the CTC is starting to see a slowdown, a noticeable slowdown. Two parts of our CTC strategy are in play. We need to see a further one. Another wick here. We've had a slight breakout of a squeeze to the downside. We're looking at 915 as potentially our target for this time frame. We look for potentially the 15 and 30 minute to give you an indication of that moving average all above us. We have a breach. This candle has to close lower now, this hourly candle. Otherwise you don't want to be faked into the wicks. So look for 915 to be your potential target to the downside to start with. Let's have a look at the hourly and daily target to S1 9151. So yeah, not too far from that if you think about it. 9150. There we go. So that'll be your first target. Second target to the downside, you're looking at potentially, if I can just get this down here for you guys, would be 9104.04. So back to the institution moving average here. So intraday, your S1, S2 are just below us if we get a close below this area here. Be aware that it is non-farm payroll, so please factor it into your trading today. Last pair of the day is US dollar, Japanese yen. Very indecisive. We had a bearish engulfing a couple of days ago. This has really dictated what price action was doing. We were having higher swings though up into that period. 2 days ago we had a very indecisive candle. And then we had this bearish, another spinning top, but still closed lower. And this morning we have further downside movement going to the European session open. So ultimately for this pair, it looks like 76.10 is back on. CTC hasn't reached our agreement on the daily. However, you drop down to your smaller time frames, we are seeing a clear resistance level here on our smaller time frames. Has to break above that 76.70 intraday in order to be classified as bullish. Even then we have the moving averages above us, so things are still looking bearish for the setup. So ultimately 76.10 would be the ultimate target down, because price is now failing. We're seeing lower swings from yesterday's action. So as that happens, we should still look for further extensions lower for pair intraday. That's it, guys. Hope you have a fantastic weekend. Please be aware it's non-farm payroll today, so I'm not trading. Rather wait. I want to see a definite confirmation from the market what's likely to happen for the remainder of the week. We do see some significant breaks on euro, sterling in particular. They will definitely give us an indication where price is likely to go to for the coming future or foreseeable future. Here in the yen in particular, we do need to see a break of either the 7700 mark and the 7610 mark, because it's been pretty much consolidating. It's quite a slow, very indecisive range. We need to see decision and quite a strong one at that. Otherwise we're just consolidating in a sideways motion, not really making much ground. That's it. Fantastic weekend with family and friends, and I'll see you again Monday morning nice and early. Until then, trade serenely.